All right, everybody, we're going to go ahead and keep this party going on to the next segment. Horns versus claws, one of my favorite, because we can look at the market from a bearish and a bullish perspective. So that way we can really get prepared for next week. I hope y'all enjoy. Let's go.
Okay, you want to jump into the stock market, that's fine. Come on armed at your own peril. So I'm here to prep you before the battle begins this weekend. Horns versus claws.
All right, everybody, we're going right to it. We're going to start with the horns. Now, the market is popping this market back up, and you can see what's going on here. We got Abbott that kept on trying to get there at 112 level. They couldn't get through it. We got ADP. They got that little consolidation right here, and it looks like a symmetrical triangle. They're trying to eat it back up. They haven't done it yet. RCA, this thing is just slowly creeping up, and it's trying to find a way to get above that order block, looking for prices above 370. So that's going up. Now we're going to talk about this week. This week we got Starbucks. Starbucks is sitting on top of the order block, and this order block seems like it's going to hold it down a little bit and probably give it a nice little pop. I'm looking forward to try to fill above the gap at $83 and start to get really deep into that 87 to 90 level. But here's the tricky thing about it. If we look at it from this perspective, it's in a bit of a downtrend like this, but if we squeeze the chart all the way over, it looks like a symmetrical triangle that's starting from here, and I got levels $71, $70, and $68. Those are levels that I'm looking for it to kind of hold it down and make sure that this holds the order block and push it up to that level. If it fails any one of those, we could really fall and put pressure on that other side. Now, GE Healthcare, this is the one that I told y'all before. GE has divested. They got into multiple different companies. GE Healthcare does look good because it had a downtrend and it's starting to break out. You can see that order block is sitting like around that $87 level. We rejected there. If we can recapture that wick and start to push to that upside, we probably could get up into that $90 level and start to really put some new highs at that point above $94.50. And the next one is Expedia. Expedia is in that travel space. So I would say we're done with the summer, so it might not really do too much. But if it can hold that gap that it just put in at 125.47, we could probably put some pressure at 141 and really fill that upward gap and head to that 160 level. So keep an eye on that. Now let's go ahead and get into the bears. Now the bears, they're doing a really good job because now RCL for one, right? It had a nice little downtrend. It did what I was expecting from a bearish perspective, but it bounced so quick I did not take that reversal. Same with AVGO, had a nice little bounce. Everything was recovering, especially with the momentum of Monday. And then you got PANW, one of the biggest ones that needed a bounce back, especially what everything that happened with CrowdStrike and Datadog. This was another one. So now let's talk about this week. We got Walmart. Walmart looks really good. It's kind of sitting on top of the order block. It is on a downtrend to a certain degree, but I think they're just putting pressure on the order block. Anything that happens where it breaks below that order block, we're probably going to get prices under $66. Now the next one we're going to talk about is Morgan Stanley. Now you know the financial sector had a nice little pullback after a really amazing run. Now it's sitting on top of the order block. I want to see what it does with it. If it can get above that downward trend line, we could get some new highs. But if it bumps its head, maybe don't fill this gap that's roughly about around $99, we're probably going to go ahead and put some pressure, get under 91. So keep an eye on that one. Now the next one is Oracle. Oracle, really good company. I don't even want to put it on my bearish list because they tend to always win, right? But right now it looks like they're trying to push it down through this order block. I'm looking for this 126 level to really hold it up. Then if it doesn't, we're probably going to get into that 121, which would be a good area of a bounce because Oracle is not in that tech space, and I think there's a little bit of rotation that's happening. So if you want to see Oracle, I would say anything under 126 is a good buying opportunity. Put some pressure on this downtrend, and when they finally break out, that's when you make the money. And that's your horns versus claws.